Hello traders, welcome to the next Well Trading Hub YouTube channel. So in this particular video, we're going to have a quick review in the EURUSD pair. I'm not really going to check out the DXY and the other pairs that we made forecast for this particular week we're trading. So clearly now, this particular video is going to really be a very short one, just to have a quick review regarding the delivery that took place today being Monday. And this is something we made a forecast of in the weekly Forex focus video. And some of the things I'll be making reference to here, if you've been following our weekly Forex focus, then you would have an understanding to a lot of things I'll be saying here. So, this is the EURUSD and this is the daily time frame. I pointed out the fact that price mitigated this weekly bearish fair value gap the second time, which is this mitigation here. And the weekly bearish fair value gap is within the monthly bearish fair value gap. So we can see how price mitigated that, taking out this buy side liquidity, and we can see bearishness. Friday took out last 2 weeks low points. So I've been making reference to this particular low point that we've been expecting to see how price would take out this low point, which is last 2 weeks low point, the sell side liquidity. So price here printed this movement, and this was Friday candle that was for last week. So we expected to see the possibility of price taking out the sell side liquidity and goes bullish. But then in lower time frame, we saw bullish reason, and we traded the bullish reason here to the upside. And we saw price again mitigating the sponsorship zone the second time, and price fell, giving us this bearish movement. So last week candle closed with this Friday bearish candle, taking out last 2 weeks sell side liquidity. So the sponsorship zone we identified from the weekly time frame is the bullish fair value gap, which within the bullish fair value gap, we have this weekly inversion fair value gap and this other weekly inversion fair value gap. So you can see that clearly we've established the internal range liquidity we're expecting to see price return to mitigate. So those are the drawn liquidity, the fair value gap we have here from the weekly time frame, which we can see that Friday candle dropped into that by taking out last 2 weeks sell side liquidity, which is last 2 weeks low points. And now we are seeing that price is still being attracted back into the weekly bullish fair value gap. And within the weekly bullish fair value gap, we have the weekly inversion fair value gap here and this other weekly inversion fair value gap. And you can see also in the daily time frame that we have this daily bullish fair value gap here. So clearly we are going to be looking at the possibility of bearishness to this sponsorship zone. So clearly now, I just want us to look at the trade setup we executed this Monday. So let's get to the 4-hour time frame. So in the 4-hour time frame, having established all that we've established from the daily, the weekly time frame. So here in the 4-hour time frame, I pointed this fact towards that price was reacting at this 4-hour bullish order block, because this was Friday candle and this was the last candle that price printed last Friday. So I told us to see the possibility of price trading to the upside, and then we have bearish continuation, or we could see price continue bearish to the downside, since we've identified the drawn liquidity, the internal range liquidity that we're looking forward to see price come mitigate. So here from the 4-hour, we have this inversion fair value gap, how price returned to mitigate that inversion fair value gap, taking out this buy side liquidity. Price fell into the bullish fair value gap here. And I told us to look at the possibility of bullishness to the upside. If price violates this inversion fair value gap and trades above it, they'll be looking at this 4-hour fair value gap, the 4-hour bearish fair value gap. But in the 1-hour time frame, we identify a rejection block here. And why we also make reference to the possibility of going bearish here is the fact that we saw that price took out the buy side liquidity. So we're going to check that. So let's get to the 1-hour time frame. So here in the 1-hour time frame, you can clearly see that we have this rejection block here. So in the 15-minute time frame was when I looked at more to the structural perspective and the liquidity sweeps. So what we can see here is we had this pullback into the inversion, but price did not mitigate the mean threshold. Price fell, failing to break this low. Price return took out this buy side, and we had the fall that took out this low point. So I expected to see the reaction of price at the rejection block here in this 1-hour time frame, because this took out buy side liquidity. Price mitigating the 4-hour bullish fair value gap, gave us the bullishness to the upside, came into this rejection block zone, and we saw the reason to go bearish to the downside. So let's check the 15-minute time frame. So here in the 15-minute time frame, we can clearly see that structural perspective. We can see that we have bearish movement of price to the downside. This was the last low price printed. And what we can see is we had the pullback to the upside. Price took out this buy side liquidity, the inducement. Price fell, failing to take out this low. We had a return that took out this high point, this buy side liquidity. This is a valid low point because it sponsored the movement that took out this internal liquidity. This is something I've taught in depth in the mentorship program. So some of these things, if you want to have a clear perspective to it, then you can do well to just check the comment section and contact us so that we can guide you on how to enroll for the mentorship program. It is very affordable. It is not outrageously expensive. We are here to help everybody. And the mentorship fee is more of like a commitment fee you just be paying, so that would make you serious and you dedicate your time to understanding the concept properly. So what we can see is that now price took out this buy side, fell to the downside, failing to take out this low. We had a return that took out this buy side. This made me to perceive this as a strong high that price has the probability to respect, because price here reacted at this inversion fair value gap we identify from the daily time frame. Return taking out the buy side, the bearish movement that took out the low points. So clearly we can see that we have a reason to anticipate to take position here. You can see here in the 15-minute time frame, we have this as the bearish order block. And in the 1 hour time frame, that is the rejection block zone. Let's get to the 1 hour time frame. So you can see that is a rejection block zone. When we go to the 15-minute time frame, you're going to see that we have that as this bearish order block. And quite above it, this can also be the rejection block in the 15-minute time frame. So clearly what I was waiting for was to see how price return here to give model for the bearish movement, and clearly price did that utilizing the 5-minute time frame. And now we can see how price sold to the downside. So what we can see is, let's turn on the session indicator so that you can have a clear understanding to this. So what we can see is this is the Asia session. So we have, this is the 12 a.m. open price using the New York time zone. So we can see we have the open price traded above it. So since what we can see is this is where we have the 12 a.m. open price, and price did not continue for the bearish. Rather, we can see price traded to the upside. So mine is to see that price will take out the Asia session high point, since my sponsorship zone is here. And then I'll be waiting to see how price would come here. So I taught this session trading clearly and more comprehensively in the mentorship program. How, what we need to be looking at, price trading above the 12 a.m. open price, above the 8:30 open price, or below it, based on the anticipation we have for that particular day. So what we can see, this is the Asia session, price traded above that into the sponsorship zone. So clearly when we get to the 5-minute time frame, what you're going to see is we have price mitigating our zone, and we have the fall of price to the downside. You can go as far low as the 1-minute time frame, but most times I like to stay in the 5-minute time frame or the 2-3-minute time frame. So what we can see is price mitigated our sponsorship zone, our point of interest. This is what's the 12 a.m. open price. So we're expecting to see, if we're going bearish, then we want to see price trade above that. So what we can see is that price here took out the Asia session low, and then as I seen bullishness to the upside. So I look forward to see that price would really validate this sponsorship zone. Price will really mitigate it and respect it. So what we can see is price return, and we had the fall of price to the downside. Here we have what? Market structure shift. So all I looked forward to was to look for the possibility of another block, a fair value gap, and what I can see here is the fair value gap here. And looking at this model, what we can see is we have the push, price broke structure, fell, broke the structure to the downside, giving us a market structure shift. So clearly now we have buy side liquidity resting here. We also have this buy side liquidity. So this becomes the engineered liquidity, and above it we have the fair value gap. So we can see how price returned to that, mitigated the fair value gap. And this was the entry, and we had the bearish movement to the downside. So when I was trying to make an update in the Telegram community, the free Telegram community, so I was in the 15-minute time frame. Let's check the 15-minute time frame. So you can clearly see that this trade setup is actually 1:4.33 risk reward. So I had the perspective to close the first position at 1:3 and hold one position to see if price is going to fulfill to the 1:4.33. So because I was looking forward to see the sell side liquidity taken. So when we saw the delivery of price, this is clearly what we saw. This is the 8:30 open price, the New York time zone. And we have the open price at 8:30. So clearly now I wanted to see how price would trade above the open price to continue bearish to the downside. So if price was to dip more higher, I was looking at this mitigation block in confluence to this fair value gap. But what then you can clearly see is how price returned to the upside. Price failing to continue more higher, but price traded above the 8:30 open price. We can see how price traded above that. And then we saw this bearishness to the downside, giving us this bearish order block. So clearly I marked this out, anticipating to see how price would just mitigate that. And then we have bearish continuation to the downside. So how then would you have framed this bearish continuation? It is to utilize the 5 minute, 2 minute, 3 minute, 1 minute. So what you can see there is this. Here we have bullish movement to the upside. Price went higher above the 8:30 open price, and then we saw the fall of price to the downside. So what you can clearly see is that here you have what? Change in state of delivery, because this is the last down close candle that sponsored this bullish movement, but price failed to continue bullish, traded below that. So we have a change in state of delivery. That is your reason to just take a position here, to set another position. Let's check 1 minute time frame. You're going to clearly see that in the 1 minute time frame. So here in the 1 minute time frame, what you can see from the structural perspective is that you had this movement to the upside. Price went above, swept this high, fell to the downside, breaking this low and also taking out this low points. So what we can see is when we had the change in state of delivery here, price gave a pullback, mitigating this fair value gap, and price fell to the downside. So price gave us here a bearish order block that sponsored the bearish movement that took out this low. And clearly we can see how price returned to that bearish order block and gave us the bearish continuation to the downside. So in the 15-minute time frame, what you can clearly see is the fact that now price traded above the 8:30 open price, and we saw this bearish candle to the downside, this engulfing candle. So where is the bullish movement? This is the bullish movement. So clearly now we're looking at how price would return to mitigate the bullish movements, which is the order block. Here you can see it as an order flow. So price return mitigated that, and you can see the bearish fall to the downside. So I'm not really breaking these things down into details. It's just a very quick review. So cheers guys, and God bless you all.